Hello, hello, everybody. All right, we're just letting everybody pop in here. Just a second here, letting everybody in. I hope everybody's having a great day today. All right. All right, I think we have everybody in that's in the waiting room. Let's see. All right. How's everybody doing today? Michael, Raven, hello. Morgan. Let's see, Erica's jumping on. Perfect. Let's wait one more minute and then we will get started. I'm going to share my screen. Can you guys let me know? Give me one sec. Gotta love all the tech stuff, right? Can't just get on and talk to people anymore. All right, let's go ahead and get started. I'm excited for you guys to be here today. We have a lot of really good stuff to go over, and got one more. There we go. Perfect. All right, I think everybody that was in the waiting room is now in. All right, so let's go ahead and get started. Welcome, everybody. I'm Andrea Jenson. We are going to talk today about mastering your business finances for long-term growth. And this is a very important topic, especially right now with all the things that are going on in the world. It's important for us business owners to really have a grasp on what's happening, how we can be prepared, and how we can ultimately have our business be as successful as possible and continue to grow and scale. So I am the founder of the Cash Flow CFO. We are a full service accounting organization. We have fractional CFOs, we have accountants, CPAs, CMAs, all that good stuff. And this is something that I'm really honored. Recently, I was named the top 5 business strategists for scaling a company by Forbes and Success Magazine. So I'm happy to say, our work is getting out there in the world, and we really are. We do this because we're passionate about it. We love businesses. We love to see them be successful, and we don't want their financial piece to be the reason that they're not those things. So a little bit about me, my corporate background. Worked for a venture capital firm, worked for a publicly traded oil and gas company, writing the 10K and 10Q reports for the SEC. I managed a very large accounting department for private equity. We were in the physical therapy space. We were doing roll-ups of physical therapy clinics. So lots and lots of transactions there to manage on a monthly, quarterly, annual basis. These are some of the companies that I currently own. Some I founded, some I purchased. And I share this with you because they're all, you can see here, very different industries. And the financial knowledge that I have and that I've created with my team is what allows it to work for any industry. So all of these companies, multi-million-dollar organizations, and they continue to flourish because of what I'm going to share with you guys today. So the first thing I want to start off with is financial mastery. So to me, I think that financial mastery is the key to business, to your success in your business. And why? Why do I think that? Well, because what I know working from large corporations and working with small to medium-sized businesses is that this is really what unlocks the success in your business. This is really what allows businesses to be able to have a competitive edge, to manage their finances in a way that allows them to really get their mission and their vision out into the world. And I think that that's really important. So some of the things that I know firsthand from working with so many business owners is that they lose sleep at night worrying about something around their finances. And maybe one of these speaks to you. Maybe you haven't experienced one of these items, but making payroll, that's a big one, right? Because that happens no matter what. You've got to every, 2 weeks, every month, whatever your pay cycle is, it keeps coming. And it's something that it's not oh, I paid it this month and I don't have to worry about it for a while. It's going to be there again next month and the month after. Um, Managing unpredictable revenue streams. Maybe right now you've been affected by changes in buyer behavior, in government funding, all kinds of different things could be affecting that. Not having enough cash reserve during slow periods, or having your slow periods change. If you look at historical data, you might go, oh, it used to be during the summer I was slow. Now it's shifted and I have two slow periods. Whatever it may be, these create unexpected financial shortfalls that can really threaten your business. Um, a lot of times you have business loans. I mean, almost every business owner I talk to, they're repaying their idle loans. They have a working capital line of credit, right? These are things that you've got to manage that credit line. You've got to meet your tax obligations. You've got vendors that you've got to get payments out to in order to keep them providing service to your business. Inconsistent client payments. We're seeing a lot of this happen right now. Payment cycles are slowing down. That's creating cash flow challenges on the business. And it makes it difficult for financial forecasting. It makes it difficult for a lot of things that used to be more repeatable and predictable are now things that you're having to kind of refigure out what's happening. Um, and maybe it's getting capital. Maybe you need to get a line of credit in place, but you're not able to do that for whatever reason. So these are all of the things that, are keeping up business owners at night. And this is really why I want you to be with me on this webinar today and hearing this information, because this is what's going to solve all of those problems I just went through, right? Your finances and understanding your finances really is the key to you being able to master your financial component of your business, which allows you the freedom and the choices and the ability to scale and serve more clients in your business. So the first thing I want to talk about is cash flow management. Successful businesses live and die by their cash flow. And there's so many statistics out there that talk to this point about how many businesses fail within the first 1 to 3 years because they haven't been able to get their arms wrapped around their cash flow management in their business. And it's important that when we're talking about cash flow, that you're understanding the timing of money coming in, the timing of money going out, and you're creating those financial buffers that are going to help you. So you've got money in reserve when things change on you, right? It's just when you think you got it all figured out, there's a wild card or a monkey wrench comes in, and just like, okay, this was unexpected. And thank goodness I have cash in reserves because I can manage through this and make the necessary shifts in my business. Strategic decision making. This is also something that your financial data is absolutely 100% going to give you the ability to do. In all things in life, wouldn't you rather be on offense versus constantly on defense, right? Always reacting to what's happening versus I'm going to create the narrative for my business and I'm going to be proactively, if this happens, here's my plan. If this happens, here's my plan. So that you've got that peace of mind as a business owner that says, okay, there's a situation that could come my way and I've got a way to be ahead of that potential risk. It's going to help you to allocate your resources more effectively. When to hire, who to hire, how much can you afford to pay them? Do you need to go out and buy new machinery? How much is that going to cost you? Are you going to rent it? Are you going to finance it? Are you going to, all the things. So that's the way that you create choices and options and how you run your business is by understanding all of the ins and outs of the cash flow. Risk management strategies. This is really important, right? This plays into that offense versus defense part of the business, right? Reactive versus proactive. When you have strategies in place that can, you're creating contingency plans, you're diversifying your revenue streams. And what you're essentially doing is you're protecting your business from the economic fluctuations that are inevitably going to come, right? It's just part of running a business. So my question to you is, which way do you want to run your business? Do you want to run it from the gut feelings of, I think I can afford this? Or do you want to look at some data and go, yep, I know I can't afford it, and this is the way I'm going to do it, and this is the plan, so it doesn't hinder my cash flow? So I'm glad you're here with me today. I genuinely, from the bottom of my heart, love what we do, love working with business owners, and I'm excited about the things that you're going to get, what we're going to talk about today. So you're going to walk away with the how to optimize your revenue streams. And that includes, most important, pricing, right? Pricing is what sets the amount of money that's coming into your business for you to then allocate into all the different parameters, all the different, buckets, I call them, of expenses that you're going to have to pay. You're going to learn about what a profitable business model looks like and how to maximize your cash flow to increase your long-term profitability, right? We're not in this for just the right now, right? This is a business that's going to support us and our family through the long haul. And so we want to make sure that we're setting ourselves up for success in that manner. You're also going to walk away with how to manage your expenses. You're going to be able to plan for taxes and know that, it's not a guess the tax bill every quarter, right? You're going to understand this is the proactive component of using your data to make those decisions that are going to support business growth. And you're going to understand how that flows through your whole business model so that you're able to stay, one step ahead of everything. And ultimately, all of these things are going to help you to be able to scale with confidence. So you're going to understand the strategies of when you're ready to. When you have a profitable business model, then you can move forward with scaling it, right? We don't want to scale a business model that's not profitable yet because it's just going to suck up all your cash. So this is, looking at hiring, new service offerings, increasing your operational efficiency. Those are the things that when you go to scale, you want to make sure you've got your ducks in a row, if you will. All right, so the first thing I want to talk about is your financial foundations for business success. So without these financial foundations, right, our business is going to be built on an unstable ground. And when that happens in your business and we don't have the foundations set in place, then it's constantly going to feel like your business is outside of your control, right? These are the things that I want to first cover, and then we'll go into the more advanced strategies. So the first thing is to think of your business's financial statements, right? Profit, loss, balance sheet, cash flow statement as the scoreboard for your business, right? You wouldn't go to a baseball game and not have a scoreboard and just kind of be like, hey, buddy, what's going on? Oh, I don't know. That guy's on first. That guy's over there. I think they hit 3 runs. I don't know, right? It's just not, it's not the same, and it's not what you would do. So what's important is your business has a scoreboard, and we need to learn how to effectively set that up so that we can read it in a way that tells us what's the score, what's happening right now. And I think a lot of business owners that I talk to, they feel a little bit of the shame game. Oh, I don't want to look at my numbers because I know they're not good. Or, I don't want to look at my numbers because I know that they actually don't make any sense. It's wrong data. So why am I going to bother looking at it? These things are going to hinder you in your business. And the ability to read financial statements, I'm going to tell you a secret. Nobody teaches this. Unless you went to school to be an accountant, there's nobody out there teaching the financial fundamentals of how to read a financial statement. And so I don't want you guys to feel, feel bad about not knowing it, because I talk to so many business owners every day, and it's the same conversation. I'm like, hey, who taught you how to read a financial statement? Nobody. Okay, let me teach you now. So that's where I'm going to start today. I want to go over, how to set up your P&L so that you can pull the information that matters the most to you as the business owner, like that. Okay, so everybody can still see my screen? Yes. All right, awesome. So this is just a very generic profit and loss statement, and I pulled this one specifically for a couple reasons. You'll notice here we've got our income section. We've got our cost of goods, and that scrolls down to right here. And then we go into our expenses, and you can just see everything's just listed out here. And then we have our net income at the bottom. Okay, so everybody's seen one of these before. Let me ask you, when you look at this P&L, raise your hand if you can make decisions like that on what the health of your business is and where you should be focusing your time and energy over the next 5-10 days as a business owner. Anybody? No. Exactly. Because this is not set up for you as a business owner. This is set up for a tax person. This is somebody who is preparing your tax return, and this is the format they want to see it in. Okay. For business owners, we want to change the way that our P&L is set up. We want to understand what's really happening from a managerial perspective in my business. And so the first thing I want to look at here is our income section. Notice we have one account here called sales and $1 amount. Well, I don't know about you, but my business sells more than one thing. All of my businesses sell more than one thing. So this is not telling me what I sold, how much I made, what percent of my revenue was made up by each of my different products or services. So we want to change the way that we're setting up our income section on our P&L. This is the first step. So list out, if you go to my website, you'll see I've got 4 or 5 different services that I offer. Each one of those, when I look at my P&L, are listed on there. So I can see how much revenue am I generating per revenue stream, and what percent of my total revenue does each one of those make up. What this is going to tell you is you might have some winners and you might have some losers, but you might be giving them equal marketing spend, or your team might be doing equal, it requires the same amount of work. So these are the decision-making opportunities here for you to look at it and go, I'm going to stop doing, let's see, what's my lowest one here? Service number 2. Gosh, my team actually hates delivering that. It really it's so much more clunky and labor intensive. And look, it's not my number 1. So I'm going to just stop doing that one. Everybody's going to be happier. And now we can focus on the ones that actually are really what the market is telling me they want anyhow. Okay. So that's the first section that I want to change. Then the next thing I want to do is look at some other big buckets of expenses in your business. So the first one is cost of goods sold. Now, cost of goods sold is any expense that the business pays to service a sale. Okay, let that sink in for a minute. So when you're looking at an expense and you say, would I have spent this money if I didn't make the sale? If the answer is yes, I would have spent it anyway. Maybe it's rent. You're going to pay rent whether you have any sales or not. That's not going to be a cost of goods sold. But if it's direct labor, if it's materials, if it's, all of those types of expenses, that's going to go into your cost of goods. Marketing. This is the other big bucket I'd like for you to segregate your expenses into. If marketing to me is any money that is spent to generate a lead, not a sale, a lead. Okay, so that's going to be the second big bucket. The third is G&A, general and administrative expenses. So these are the expenses that you would pay for even if you didn't make any sales. Rent, utilities, telephone, indirect labor, dues and subscriptions, et cetera, et cetera. Okay, so what we're going to do is we're going to take that same P&L And now using these colors here, we're going to color code the sections so that I'm able to identify these are all my cost of goods sold expenses. These are all my marketing expenses. Here's all my general and administrative. And oh, look, some of my cost of goods sold got stuck down here, but they are really cost of goods sold. So this is why we want to go through this process of identifying each line item. And then once we've done that, then the next step is to say, okay, let's assign some percentages so we can do that same analysis that we did with our sales on our expenses. And then we're going to make it even more useful of a tool by adding them all up. So all of my cost of goods sold, they equaled 573,000. 573,000. Can't even talk today. I'm going to skip that number and move on. That represents 49.7% of my revenue. Okay, that's a really useful number to know in my business as a business owner. The next is marketing. My total marketing expenses, 5,785, represents 0.50 of my total sales. That is a very important number to know. The next is my general and administrative, and it's 158,000, and that's 13.7% of my total income. Now, does this look like something that is a more useful tool than going through your entire P&L and trying to look at line by line and going, yeah, okay, great. What do I do with it? What is it telling me? Well, what it's telling you is that when I look at a healthy business model, these are the percentages that I want each of those big buckets to fall in. I would like my cost of goods sold to be 45% or lower. Now, most businesses, if you go and look at yours right now, it's probably around 50 or 60%, and that's normal because you haven't been doing this analysis. This is where, these are kind of a generic number, but it's a good, healthy business model. So depending on your industry, we benchmark you a little differently, just, kind of letting you guys know that, but it's a good rule of thumb. Marketing should be around 10%, G&A around 20%, and profit 25%. Now, this business is pretty healthy, right? We look at, our COGS are a little bit higher, not too much. Marketing, oh my goodness, we're not spending any money in marketing. Now, if I was a business owner and I came to my CFO and I said, I can't hit my sales numbers, something's not right. Your CFO is going to come and look at this and say, what is your customer acquisition cost? Because you're clearly not spending enough money to generate the amount of leads that you need to convert into sales. This is a tool, okay? I might come in here and look at, typically our G&A is for most businesses, it's over the 20%. It's usually closer to 30%. And when these percentages are out of whack, that means that this has to be out of whack. So we're not protecting our profits. And so this is the first step to getting the financial foundation in place for your business to have a profitable business model. Okay. So some of the tools that we've created here is, we want to look at it in this, we want to take the P&L, distill it down to this information, and then from here we make decisions, right? If we know what our budget should be for each of these sections. Oh, actually, let me do a deep dive here on the profit really quick. So when we look at the bucket allocations, I consider profit an expense. And here's the reason why. When we look at our P&L, we see that net income. Okay, so for this business, their profit was 416,000. Does that mean that if I go look at my bank statement, I have 416,000 sitting in my cash account? No, it absolutely does not. Do you know why? Because your P&L is only telling you half the story of the activities in your business. When we're talking about your operating profit, that's one thing, but it's not cash flow in your business. What you don't see on your P&L is servicing any debt. Are you paying for a car payment? Are you paying on your idle loan? Do you have a line of credit you're repaying? Those are things that are not going to show up on your P&L, but they're decreasing your cash, right? So it's important to understand what shows up on your P&L is the interest expense, but not the principal. So that's one thing that your profit is going to pay for. The other thing is we're putting money aside for taxes so that when the tax bill comes, we've got money to pay it. We are looking at distributions. So as a business owner, your compensation is made up of maybe you're on salary and maybe you take some dividends, distributions, whatever your entity type is. It's money you're pulling out of the business or personal expenses you might be running through the business. Those are coming out of your profit. Reinvestment. This is a really big one. When we go to scale our business, we have to have enough money in this profit bucket here to pay to hire forward, to pay to try a new marketing channel, to pay for all of those things that are us testing how we can scale the business without it affecting our operating cash flow. Okay, that's a really, really important piece to isolate and make sure it's coming out of the profits and not your operating cash flow. And then we talked about debt, right? Servicing any debt that you have. So that's really important to understand. And that's why I look at profit as it's going to go in one of these places, right? So let's account for it accordingly. So once I understand what my revenue goal is, so this is a fun calculator that we came up with to help business owners kind of create those big budget bucket, a budget for each of those big buckets. So let's just say our revenue goal is $1 million. And so we're going to add some zeros here. And watch what happens to all of my numbers in column D when I change my goal. So what it's doing is it's saying based off of the percentages that I've said I want as my target for each of these big buckets, I now know what I can spend. So if I make $1 million this year, 450,000 should go into my cost to deliver what it is that I sold. And 250,000 should be in my general administrative expense budget. And the marketing should be your budget there for that too. So it's important to have this breakdown, right? So now we take it and we make it more granular, but this is giving you the high level of, can I actually run the business? Is my model profitable? Okay, great. Check. A foundational piece is now in place. I can move on to the next thing. All right, so let me just pause there really quick and open it up. I'd love this to be interactive. If you have questions on anything that I've talked about so far, unmute yourself and let me know. Everybody's following along?
Hey, Andrea, why would debt service not be included as a separate expense line item? Why would you embed that in profit?
Because it's not on your P&L. We're talking about when we looked at our P&L over here, you're not going to see if you're paying your debt, right? You're going to see the interest expense, but the actual principal payment goes on your balance sheet. So it's affecting your cash balance. But if we're just looking at the P&L, it's not telling the whole story of the cash flow in the company.
Okay, thank you.
Great question. Thank you. All right. Welcome, Jane. We're happy to have you here. Better late than not at all, right? All right. So once we understand that, the next thing to do is to look at some key performance indicators, right? When we're talking about as the business owner, we don't want to be in the weeds of all the accounts on the P&L. We want it high level so that we're able to zero in on where do I need to spend my time and energy to keep my business model profitable. So looking at our starting point or at the KPIs that we're going to be tracking. So cost of goods sold percentage, we would put in where are we at now and where do we want to be in the first 90 days. Okay. And then we're going to track it quarterly to see the progress as we continue operating the business. So we've got our general and administrative expenses, our marketing, our profit, and then we're going to add in a few other ones that are really important to keep your finger on the pulse in your business. So one is our direct labor percent, and one is our indirect labor percent. And this is important to be isolating these two out because direct labor generates revenue. Indirect labor is a support role. You want to make sure that you have the right mix of team, so that you're able to, generate revenue as efficiently as possible with your direct labor. And you've got the right indirect labor, right, and administrative support to facilitate them continuing to produce revenue. Okay. So that's important to look at and to be tracking. Owner's pay. I always want to be looking at owner's pay because most of the time, owners aren't paying themselves enough. Or the other side of that, which is a really important piece too, is that your business model, if you are owner operator, which means you are in the day to day, you are pushing buttons in your business to make it run, you are an integral part of how it operates, you should be either in direct labor or indirect labor. When you are a team managed and run business, you should be in the profit bucket, right? Because you want to train your business. If you are in the owner operator role, our goal is to get you out of that and to backfill the functions that you're doing, the position that you're in right now. And so what we want to do is we want to allow the business model to absorb the market rate for what it is that you're doing, the functions in your business. So if we were to, hire your replacement tomorrow, just as an example here, what would you be paying to find somebody with a skill set that's comparable to what you're doing? Now, your skill set is much more than probably the role you're in, but let's just say you need to fill, like, you're in the middle of operations and you want to bring in, an operations manager. What would you be paying in the market to get that? And the reason is we want to train our business to be able to absorb that market rate, because when we are ready to transition, we don't want to mess up with shock the business and the cash flow because you haven't been building all of your other components of your business model around that. So it's really important for the business owners to understand where their pay should be coming out of. And, for example, with my businesses, I'm not in the operations. I'm not pushing buttons in those businesses. I have, we have a team that's doing that. My pay comes out of profit. Okay. All right. So that's really important. And I'm going to pop back over. Yes. Okay. So now let's talk about optimizing those revenue streams. Now we know we haven't broken out on our P&L. We know what they are. And let's talk a little bit about pricing strategies. So if we look at our cost of goods sold and it is higher than 50%, that right there tells me we either have a pricing problem or an efficiency problem. The first one to tackle is going to be your efficiency. Can we get our costs down and still deliver the same quality of service or products? If the answer is no, like I cannot get it any lower, this is what it really takes in costs to deliver this service, then that means we have to raise our prices, right? We're just looking at a very mathematical equation here. Okay, so when we look at pricing, there's an art and a science to it. The science is, oh, look, we got some fireworks. Zoom liked that. The art to it is we have to understand the market. We have to understand what the market will bear. But the science to it is mathematically looking at if we cannot deliver our products or services for, the right margins, then we have to raise our prices, or something is flawed in our business model and it doesn't work. Right. And there's been lots of times that we've worked with clients And we've done this analysis on their business model. And we say, as it sits today, you will never be profitable the way that you're functioning. So how do we play the Rubik's Cube here and get you to where you're serving the clients like they need to be served, but it also is serving the business, right? Your model is profitable. So those are the two things to look at. We also want to look at how do we change our potentially our business model, right? Do you only have one time, one service offerings and you're constantly in that hamster wheel of sell, sell, sell? Or do you have subscription-based revenue, maybe memberships or reoccurring income strategies that you're deploying in your business? The other thing we can look at is upsell, bundling, cross-sell, right? When we look at that average transaction price. So I'm going to walk you through an example. If you come to me and say, I want to increase my revenue by 30% this year, I'm going to say, okay, awesome. What's our baseline? How much can the business produce already, right? And how much is that gap that we need to make up with new customers? And when we understand the dollar amount, then I say, okay, how many transactions is that? What is your average transaction price? And when we understand how many units we now have to sell, then we go to our marketing. Then we go look at, okay, what are our customer acquisition channels? And what's the conversion rate on each of these? And how many new eyeballs, leads do I need to convert them into buying units? Okay, so this is how we're always looking at. It's a lot easier to sell to an existing client, to sell more to an existing client, because you've already paid to acquire them. So we want to maximize how we're serving them and find other ways to, fulfill needs that they have and generate revenue for the business. This is one of our clients, Erica. She had a P&L that looked like what I showed you in the beginning. All her revenue streams were bundled into a couple different revenue streams. So she didn't have that clarity into what's the most profitable and where should she be telling her team to, like, her sales team to focus on. And so when we broke down her sales goal and we showed her, well, if you just sell 10, 10 more of this, that's how, and it compounds, right? Every month it's compounding. You're going to get to your sales goals so much faster. And sales equals revenue equals profit, right? So we want to be thinking about what clarity do you need to have on your revenue streams. All right, I'm going to switch gears a little bit here. And we are going to talk about cash flow and expense management. So when we talk about cash flow, right, this is the lifeblood of your business. So understanding the cycles that happen in your business, in your industry, with your suppliers, with seasonality, like all of the different components. This is how we're going to create that stability in the business, and we're being proactive and creating a plan. Not all 12 months are going to be exactly equal in your sales revenue, right? They're going to fluctuate. Some months are your better months, and some months you're going to have a dip. So how are we managing and preparing for those months that might be, the dip in your seasonality, to make sure that we have cash flow in place to sustain us? So some of those tools that we can use is we want to look at a cash dashboard, and that's going to be a snapshot of what your cash position is today and the working capital as of the last closed period. Okay, that's going to show you what's your cash runway, because you can compare that to how much cash do I have in my cash accounts, how many days of cash do I have, what's my runway. Okay. The next thing is a cash flow forecast. So this is a really important tool in managing the trends, right? We talked about seasonality. We talked about just all of those, the ups and downs of future cash flows. So having a forecast that's going to give you that visibility, you want to have a rolling 12, 18-month cash flow forecast so that you're well aware of when there's potential dips in cash flow and you're able to stockpile cash when time is good to get you through all of that. The other thing is a cash flow statement. This is a report that if you're using, accounting software, QuickBooks, it's a report you can run that's going to show you monthly what's happening with receipts and expenses. All right. Um, this is Stephanie. She's one of our clients, and she was absolutely head in the sand. I do not want to know anything about my numbers. And through her learning about these different tools and different ways of looking at the data, she now loves it, and her business is flourishing because she's using it like if you went to the baseball game, she's using the scoreboard to make decisions and grow the business. All right, reducing expenses without hindering growth. This is also part of scaling, right? You're going to get to a point in your business where you have economies of scale, which means your fixed expenses, most of your general and administrative, regardless of how your revenue grows, they're going to stay pretty uniform. They're not going to be going in lockstep with the growth there. So when we understand what point in our business we're able to take advantage of some of those efficiencies, it helps with planning and it helps with setting your sales goals. The other side of that is looking at, what is the ability to identify expenses that aren't necessary. So one of the things that I love doing with our clients is we do what's called a highlighter review. And what that is we run a general ledger detail report out of QuickBooks, and we sort it, and we go line by line through all the expense accounts listed. And we say, okay, we've got three colors that we're going to use. We're going to highlight in red if we look at an expense and go, oh, yeah, I'm not actually using that anymore. Software subscriptions is a big one there that we identify. If we see something and we highlight it in yellow, it's yeah, I remember the team asking me about getting that. And I said yes, but I don't know if they're still using it. So I'm going to research that one. Okay. And then the third one is if I highlight it in green, it is absolutely a necessary expense for my business. And I need to, yeah, budget it in. It's going to stay. If you go through this highlighter review exercise in your business, you are going to uncover a lot of money leaks, number one, and you're going to be able to plug those money leaks. So those are ways to identify maybe there's some unnecessary costs in your business. And then, help you to stay in line with those budget allocations, the percent allocations for those big buckets that we talked about earlier. When we talk about efficiency, there's lots of ways you can set up rules in QuickBooks to automate the coding. And QuickBooks has gotten so advanced that they'll even do a pre-reconciliation for you, so that you can go in and it saves you a lot of time. So these are things we want to look at. We don't want to hinder growth, but we want to reduce expenses, find those unnecessary costs, find efficiencies, and implement them. And if you're not looking at this data, you're not going to be able to find those. So get comfy and cozy with your financials, your numbers to be able to do that. Because most often that's going to drop to your bottom line, right? Your profit is where that's going to drop to when you find those efficiencies or unnecessary expenses. Okay, so looking at, we've got a lot of the foundational components. We've got ways to maximize cash flow. We want to look at some planning. We want to be proactive. We're going to talk about tax strategies and also scaling for growth. So, when you have clean numbers and you're sharing those numbers on a quarterly basis with your tax strategist, you are absolutely going to be saving on taxes, because in the beginning of the year, they're going to create a plan for you. And if you're not talking to them until the end of the year to say, okay, here's what actually happened, you don't have a lot of time to make adjustments as necessary. But if you're quarterly sharing your numbers, then they're able to maximize your deductions, reduce, liabilities and things like that. So that's the number one common tax mistake that I see business owners making. The second is that they're not sharing the holistic plan between their personal life and their business financials. Okay. When we make a decision in our business, it usually affects us personally, financially, and vice versa, right? Because our business is the biggest asset that we are going to generate most likely in our lifetime. Okay. And so that asset is going to be giving us the income on the personal side to do all kinds of, activities and pay for our lives and all the fun stuff that we want to do personally. So when business owners don't share, hey, I want to next year, our family is talking about, buying a bigger house or buying a second home or investing, we want some investment properties. If you don't share that with your tax person from the business perspective, they're just minimizing your tax liability, right? But that might not always be the beneficial thing to do when you're going to take those financials and that tax return to a banker and say, hey, I'd like to take out a loan for X number of dollars, right? So it's really important that everybody's on the same page holistically of what you're trying to achieve on the personal and the business side. The second thing I would say, just kind of on that topic, is make sure that we're keeping our personal expenses and our business expenses separated. Because oftentimes, when we're smaller, we just kind of, hey, where's cash? I need to pull it, and we mix match things. But as you get bigger and you're doing more strategic things with the business, you want those to be really clean and no personal expenses running through the business. All right. So when we look at, we want to grow now. Okay. Everybody, is right now scaling is the most trendy word out there. And for good reason, right? Like I said, this business is an asset and this asset has value. And as you increase the value of the business, when the day comes that you're ready to exit and sell your business, where you're at in revenue and net income or EBITDA, earnings before interest, tax, depreciation, and amortization, is greatly going to affect the price that somebody will pay for your business. So we want to be growing this asset, right? We want to keep increasing the value of your asset. And in order to do that, you need to implement some tools, and forecasting and budgeting are going to be a very big component of that. So a lot of business owners, they have a bookkeeper and they have a tax preparer. And what happens is those two roles in the business, in your finances, they have a historical point of view, right? Your bookkeeper is seeing what came in from the bank account, coding it to the right account so it shows up in the correct category on your P&L. Your tax preparer is taking that information from the bookkeeper and preparing tax returns. Okay. None of those positions or those skill sets are looking at the forward. Where are we taking the business? Right. So what's coming up, how to be prepared and how to be profitable. And I always like to use a car analogy when I talk about this because it helps us to kind of visualize. Your tax preparer and your bookkeeper are sitting in the back seat and they're looking out the rear view, out the rear window of the car, right? Where you went and how much you spent is what they're looking at. Your CFO is sitting next to you in the front seat as you're driving the car as the business owner, and they're telling you, here's what's coming up. Here's how we're going to plan, and here's how we're going to be profitable. So you need all three. It's the trifecta for your financial pillar in your business, but they all have very different skill sets. And I'm sure you can think of a time you've gone to your tax preparer and said, hey, how do I grow my business? And they just kind of look at you like, I don't know, but I can save you in taxes. So everybody's got a different skill set, different educational components, different experience that's going to help you with each of these different roles. All right, so we are doing great on time. Yay for me. Usually I get off on a tangent and I talk too long and I don't get through all my content. So our key takeaways, we want to optimize our revenue through pricing and through a profitable business model, right? And that can look at a lot of different ways, and there's no right or wrong. You've got to find what fits best for you, for your business, for your clients, for your personal financial, goals, all of those things. But we talked about how to optimize revenue. We talked about how to know if my pricing is set correctly. We talked about how to make sure we're delivering what we're selling in a profitable way by looking at our cost of goods sold and breaking out that percentage line item on the P&L. We talked about mastering your financial planning. Cash flow, you've got to, I said it earlier in one of my slides, live and die by the cash flow. That is the lifeblood of your business. And if you have all these tools in place, you're going to be proactive versus reactive with the cash in your business. So that's one of the biggest pieces here, if I could say as a key takeaway, is understand your cash flow and be in charge of your cash flow instead of reactively waiting and just, doing operating the business based on what you have coming in. And tax strategies. There's only so many things you can do on the tax side. And, there's the deductions, there's the credits. They're pretty standard. What's important when you talk about a tax strategy is a holistic tax strategy that's taking into account all of the components of you as that individual business owner and how this asset of your business is financing and funding all of the other activities that you want to do to create personal wealth in your life. Scaling your business with confidence and financial foresight, right? This is why we're here. We want to grow. We want to serve more clients. We want to hire more amazing people to work with and, make their lives better by financially, helping them, with jobs and security and things like that. So you want to be confident, have the data, have the team helping you prepare that data to give you that financial foresight to continue to scale your business with confidence. This is Sean, one of our longtime clients. Oh my gosh. We've been working with Sean now 4 or 5 years. Yeah, time flies. And he has an amazing company. He does staffing. And we are his full financial pillar of his business. We have the CFO in place, we have the staff accountant in place, and it's allowed his wife to actually, who was in that role, step away and go do things she was passionate about. They've got young kids and all the things. And so we love that. That's a good story to tell because she was good at what she was doing, but she didn't love it. And so she got to go off and do what she did. And we're doing what we love, and he's growing the business. These are some of the core values that set our company apart from other financial service companies. And I think the number one there is results. And that's really important because you can get a bookkeeper or a tax preparer and they're crunching numbers, but they're not invested in the results of what you're trying to achieve in your business because they just don't have the skill set or the capability to help you achieve those goals. So our core values, results, ownership, partnership, flexibility. We're working with small, medium-sized businesses here. We got to be flexible, right? Things change on the fly. And that's why it's great to have those what if scenarios. So you're prepared there. Optimism and abundance. We are always, my favorite thing is when a client comes to us and says, hey, I thought of a new revenue stream. I want to do this, and this. And we just kind of go, cool. All right, let's go figure out how we're going to make it work. And we go and crunch the numbers and bring it back to them so that, we hear a lot that when they're working with a financial team and they bring their vision, their all this new creative stuff that they're coming with, they get shot down. Oh, we can't do that. That's too expensive. Or, oh, that's and that's not how we roll. We're definitely of the abundance mindset. So, what I want to share with you is that you guys can have this in your business, right? This is not something that only big corporations get to benefit from this financial expertise. You know, what we've done is we've taken our corporate experience, brought it down to usable strategies and tactics for the businesses that are really making an impact out in the world, right? They're serving the clients that, you know, we love working with, and they're doing good. And so what you guys can do is you can add a CFO to your team, and you're going to get that expert financial management. You're going to get the improved cash flow management, enhanced financial reporting, and you're going to get that financial tech stack. I didn't even go into our dashboards and how they link with QuickBooks. And every hour when QuickBooks is updated, our dashboards repopulate and recalculate all the information. And so you're getting real-time analysis, not 30 days after we close the month, or, you know, that lag period. It's really cool. And profitability improvement. We're helping you to understand, here's what you should implement as far as cost management, pricing strategies, and such. So next steps, I'm going to end right on time, and I'm so happy. I usually, you know, yeah, anyway, I could talk shop all day long, so that's why I always run over time. But next steps. Okay, you've got some tools and templates that I shared with you guys on the webinar, and I'm going to make an offer to you for you to get those. So you can get those through working with us. And there's also a lot that we have on our website as resources that you guys can check out as well. Some of the things that I hear a lot is I can't afford a fractional CFO. And what I want to say to that is that you can. That's why this business model exists. And this is a service that pays for itself. So, way more cost effective than hiring full time. And the insights that we're going to and we can generate for your business pay for our fees. So, investment, not an expense. Sometimes I also hear, well, we're not big enough to need a CFO. And any business, like, ideally, if I could, like, just magic wand moment for the whole business community, is when you first start your business, you would have a fractional CFO. And I know that's not cost, like, it doesn't make sense, but that would be like the most amazing thing, because you would set up your business model correct right from the get-go, and you would be profitable out the gate. But having, you know, a CFO on your team is going to help you prevent costly mistakes, and also going to help you to scale. No one knows my business like I do. Oh, I hear this one a lot. And guess what? We might not know your business, but we know your model, and we know all the different models out there. And so, you know, we're bringing that enhancement. We're not replacing your financial decision making. We're giving you the data so that you can make great decisions in your business. I don't have time to onboard another professional. Yep, that's not how it works around here. We're super quick, and we got that. So this is one that I hear a lot. My accountant already handles our finances. And this one, we talked about it already before with the car analogy. Your accountant is not going to give you this data. They're not going to prepare a forecast and a budget and all of the, you know, what if scenarios, because that's not their skill set. So what I want to do today is offer you guys a super duper, super, really great package here. It's a financial clarity accelerator package. This is something that we normally charge well above, you know, 3,000. And there's things in here that my team's probably gonna be like, you said what? But it's really what's going to help you move the needle. And that's really what matters the most to me, is that you guys are, it's one thing to hear about all of these tools that you could have in your toolkit as an owner, but it's another thing to really see it in practice and be able to, you know, start to implement it in your business in a way that's really going to move the needle for you. So the Financial Clarity Accelerator package includes a 90-minute deep dive financial analysis, a personalized report identifying key growth opportunities in your business. We're going to help you to uncover hidden profit leaks and inefficiencies, and we'll do an assessment of your current financial management practices. So you can see this is a lot of really good stuff. And I wanted to make it at a price, there it is, that you guys can try it out, right? Give it a test run. $497. This price is only going to be available to you guys on the webinar. I don't have it posted anywhere else, and I don't know that, that we will. So, but I want you guys to be able to get your hands on this, get the access to the tool. Morgan just popped in the link. If you guys want to take us up on this offer, click on that, and you guys can get that payment processed, and then we'll schedule and get you, the little questionnaire that's going to help us prepare for our meeting together, and really go through that process with you, and you'll get a little taste of what it's like working with, a fractional CFO in your business, and you'll be able to see if it's something that, that helps you and you want to continue working together. So any questions or anything that I can answer for you guys? I know we're 2 minutes over. I almost had us right to the minute. No questions? All right.
I have a question for you. We have a call scheduled for next week.
Yes, we do.
And since I'm going to go ahead and do this, is that something that we can just kind of roll into that meeting as well?
Yeah, absolutely. Okay. We'll probably push it back because there'll be some data that we'll ask you to send over so we can do some analysis before we have that call. But absolutely. Yeah, no, that's great. I'm excited. All right. Well, thank you guys for joining today. I hope you guys got a ton of value. And I know that I really went fast through a lot of it because I wanted to share so much. Like I said, I'm happy. I love talking this stuff all day long. So email me if you have questions. You'll be getting a follow-up email from me. And please reach out if you have any questions about how this particularly pertains to your business. And yeah, I'd love to chat with you some more. So thank you guys. Oh, Derek, thank you. You're welcome. Morgan, you're welcome. Thank you guys for joining me. Great to see some familiar faces and some new faces. And I hope we have the opportunity to work together. All right. Have a great day. Thank you.